So in this segment, we're going to talk about what some of the common financing options are for buying a franchise. So my first question is, what are some of the most common financing options for buying a franchise?
SBA financing, of course, right? We can finance 80 to 90% of the total cost generally. That's probably the number one. Some people choose to take an old retirement account and do what's called a Rob's rollover, and that has its pros and cons, of course. Some people have a lot of equity in real estate and they put a line of credit on their house. Some people have really good credit, really good day job, so they'll go out and get a personal loan or alternative loan that's non-secured. And or some people have a bunch of cash and just can pay cash for 100 grand or 200 grand or 300 grand. And some people do a combination. They borrow from the retirement and then they get an SBA loan, or they get a HELOC and they get an SBA loan. Most people want to take on good debt. So even though SBA rates are a little bit higher than they were 3 years ago, rates are starting to come down. So SBA to me is probably the best option, because instead of sucking out equity from your home, borrow against the business and leave that equity in your home for a rainy day or for some other investments. So I would prefer personally to do an SBA loan, even if I had 200 or 300 grand of equity in my house and I could write a check for my equity line. I'd rather use that capital and put it into some investment vehicles and then also have an SBA loan. I think you can grow faster by leveraging the equity in your house in a different way and utilizing SBA.
Okay, so that's a good segue into my next question, which is getting a little bit more detailed about SBA loans. So how do SBA loans work and what are their advantages for franchisees?
So SBA is a federally guaranteed loan program for startups, franchises, expansion, so forth. The loans are not made by the government or SBA. They're just guaranteed. There's banks, there's credit unions, and there's non-bank licensed lenders that make these loans. And if they're a PLP, it means they're a direct underwriter of the loan, and they can do everything in-house on the SBA 7A loan, which is what we're funding most of the franchises with. A big portion of the loan is guaranteed by the federal government. So the banks know that, and they will make loans that are probably a little bit out of their comfort zone based on the guidelines that SBA had put in place. So, for example, there's a business, a franchise, and it's $100,000 and there's no collateral. Typically, no bank will lend $80,000 or $90,000 for a startup with no collateral. But since it's SBA, we've got a bank that will do 90%, assuming you have good credit and you have outside income that supports outside debt. So you could never get the leverage anywhere else, typically. So that's a huge why. You can build in working capital. It's a 10-year term. Most other products are a lot shorter term, which means you're going to have a higher monthly payment. The list goes on and on and on. It's really an amazing product that we have here in the States that other countries, oftentimes I talk to a lot of Canadians, they wish they had this product. So we're very fortunate. You can have up to $5 million in aggregate SBA financing, so you can grow and grow and grow and grow until you cap out, and then there's other products we can put you in. That's the real advantage, is that there's nothing else out there that will do this high leverage financing. To me, is number one. Rates aren't bad, terms 10 years with no real estate, so longer amortization, and essentially it's going to get you in the game while with a very low out of pocket, and that's the real selling point of SBA loans.
So another way to finance a business, and you mentioned this, I think you mentioned this at the beginning, was seller financing. So how does seller financing work, and when is it a good option? And conversely, when is it a not so good option?
So on a startup, well, I mean, actually, some of our startup franchises, they'll finance the franchise fee sometimes in-house. But generally on a seller finance deal, we're talking about a business acquisition. That's where the sellers will finance it. Usually they want some sort of equity injection or down payment. Seller financing on acquisition is usually the best if you can get it. But most of the time, sellers want the majority of the money today, and they're okay getting a little bit later. So usually what you see is an SBA loan with a little bit of a seller carry back on a business acquisition. But if you can get the seller to carry the whole thing and the deal's a cash flowing machine, and they'll give you a better rate, than you might get better terms that you would get through the SBA loan, seller finance all the way. Plus, you don't have to do all the paperwork. You might not have to do a PG, personal guarantee, like you would if it was an SBA loan. So sometimes there is some huge advantages to seller financing. But I like to do the combination of SBA with seller financing, and you can get in these deals with very little out of pocket.
Are home equity loans a viable choice for financing a franchise? I think you answered that already, but what makes them a good option?
The rates are generally lower than they are on SBA, and it's easier to get, less paperwork typically. And sometimes people might have a harder time for one reason or the other for getting SBA, and they might already have an equity line on their house, so the ease of it. I still think you should look at SBA because when you go into business, sometimes there's unexpected, or sometimes you get the opportunity to buy another business because somebody's going out of business and you can do real. So having more capital at your hands. So I would always say if the rate, there's going to be a little bit in difference in payment, but to have that extra 100, 200,000 in equity in your house still is a safeguard for one, and it's also an opportunity guard where, like, if a new opportunity comes in, you're not tapping all the equity you had, and now you have no other cash flow to put down on another opportunity. So I would always look for SBA.
All right. Last question. What should franchisees know about using personal savings or retirement funds for financing?
Talk to a CPA if you do a Rob's rollover. There are some costs to do it. It's usually a couple grand. It's not cheap, 4, 5, 6 grand. I don't know exactly, depending on the provider. And then there's monthly upkeep for the rollover. And then there's you're doing it as a C corp, so there could be some not the best tax strategy if you're trying to take cash flow out of the business monthly. So I would look at that. If you have 100 grand and you're like, well, I could just pay cash and then I could, bootstrap the rest. Then all of a sudden the business stalls out. It's not doing as good, or COVID happens again, and all your money's in a deal. You never want that to happen. When I was doing a lot of real estate, I saw that happen time and time again. Don't put all your money into the deal. You need reserves. You need 6, 12 months of reserves. So pay a little bit in interest and get the SBA loan is my advice. In some cases where you've got a lot of money and you're sitting on 500 grand and you can write a check for 200 grand to get into the deal, then maybe don't worry about it. But if you're putting your 100 grand in and you're not going to be left with much, then I would definitely look at getting some sort of business loan or SBA financing. Hi guys, Bo Exian here, and I'm with Baby Bo. Baby Bo is just a little over 4 months. He's my first child, my wife and I. So if you want to create legacy for your family, I highly suggest you go to our Business Ownership Summit. You can find all the events we're doing. Primarily, they're all free. You can go to boeckstein.com/events. And I hope to see you at one of our events where we teach business ownership, how to leverage SBA financing, tax strategies. I'm not a CPA and an attorney, but we bring CPAs on. You're going to learn why everyone should own a small business. So I hope you attend. Go to boeckstein.com/events. I'll see you at the next one. Hey guys, Bo Exian here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.